Hey everyone, it's David Caracci with the Vet Group at Covenant Partners Realty. Today we're going over a question I get asked a lot during the home buying or the home selling process, and that is, what is the difference between an assessed value and the appraised value of a home? The first term I want to go over is, what is the assessed value? The assessed value comes from your county tax office, and that's utilized to figure out how much money you owe every year on your property taxes. So it's very important as a property owner to understand how they come up with that number and how they use it to come out with that final number at the end of the year for you to pay for your property taxes. Now there's two main variables that come into that final payment per year. The first one is the actual property value itself. And they break it down to two parts. You have your land value, and then you have your improvements that you've made on that land. When you add those two numbers up, that gives you your assessed value. Now, when you multiply that by your tax rate of your local area, your local county, that will give you how much you pay per year. Now, the important thing to know is your assessed value is very influenced by the entire market of that neighborhood. Now, the reason why a lot of times your assessed value is going to be a lot less than your appraised value is because they only do it once a year. The county will hire a third-party company that goes out there and will do the assessed value of your neighborhood. They don't know what you've done inside the house or in your backyard unless they use Google Maps to kind of see what's back there. But for the general understanding of that house, they're just looking at the neighborhood. Most of those neighborhoods have high-end upgrades inside their house or not. If you are one of the few homes that have that high-end upgrade, most likely that county is not going to take that into account for your assessed value. That will make your assessed value a lot less than your appraised value. And honestly, a lower assessed value is good for you because that means you pay less per year. When it comes time to sell your house, that's when you want the high appraised value, which is more important for the actual sale or the purchase of a new home. When it comes time to actually sell your house or purchase a new home, it is important to understand the second term, and that term is the appraised value. The mortgage company for the buyer will be ordering an appraiser to go out there and give you an appraised value of that house. Now, the appraised value is going to be that specific moment in that neighborhood for that particular house. Now, one important thing to note is normally the assessed value is going to come up lower than the appraised value. And the reason why is because that appraiser is actually going to go inside that house, see the upgrades, see the condition of the home, and see if there's any major repairs that are needed for that house. Based off the conditions and the findings of the appraiser, or the appraisal will give the true market value of that house. And that's what the mortgage company is going to use when it comes time to actually back that loan. One of the issues that can arise during the appraisal process is that the home could actually appraise less than what the contract is. What do you guys do in that scenario? Well, there's four different options. One is that both parties agree to leave the contract. Maybe the seller doesn't want to reduce the price and the buyer doesn't want to come out of pocket, so they decide, we're just going to walk away from this contract, which is perfectly okay, at least here in Texas. The second thing is that the seller can reduce their price down to what the actual appraisal value was versus what the original contract was. The third thing is the buyer can come out of pocket if they really love that house and they don't want to go and shop around and come into another bidding war with another house. They might actually come out of pocket and pay that difference that the mortgage company won't cover. The third option is that the seller and the buyer negotiate and come up to a agreed upon price where both of them are coming out of pocket a little bit, but none of them, or not one of the parties, are coming out of pocket the entire price of that difference between the appraised value and the contract price. Now, why this might not be an exciting topic is a very important topic, because these two terms get misused all the time, and it's very important to understand why they're different and why those different numbers come up all the time. Especially when you're looking at a different market. Let's say you're looking online on a Zillow or Trulia or Realtor, Redfin, and you see that the assessed value is way under what they're asking for. Why is that? Well, now you know. The assessed value is for the tax purposes, and it's actually good to have a lower assessed value because that means you most likely would be paying less per year on those taxes. The second term is your appraised value, and your appraised value actually goes along what the true value of that house is based off the current market conditions. Now, obviously with single family homes, market trends are really heavily dictated by the truck that's passing by, and also emotions that are attached to those single family houses. If that market, like here in San Antonio, anywhere in the Pearl District or Historic District, the prices are going up so rapid. And the reason why is because those emotions. A lot of people want to buy houses in those markets. So your assessed value is going to take a year before it reflects that, while your appraised value, as soon as you get that appraisal, is going to tell you those market trends as of right now. I want to thank everyone for watching this video. I hope you guys understand the difference between the appraised value and the assessed value next time it comes time to either buy or sell a house. It is important to hire a realtor who truly understands that market value and that market trends, so that way they can predict if you're going to actually have a home or a scenario we're going to be under appraised. It's not fun for the buyer, the seller, or anyone else that's involved in that transaction. So make sure you hire a good realtor that's not going to get you that scenario in the first place. We're entering into the month of June and we're already hitting 100 degrees. It's not even 12 o'clock yet. So make sure you guys are staying cool and drinking plenty of water. Until next time, David Caraccio with the Vet Group.